All right, good day. Welcome to my YouTube channel at Illumination Hub NG. Kindly click on the notification bell so that you can have access to any video I'm going to be dropping on this channel. And also, subscribe to the YouTube channel and share the video among your friends and colleagues. So today we're going to be moving on with our previous class on trial balance, on how to prepare the trial balance. So right here, you can see on my screen, I have a very simple question that I'll be attempting, and so that you can have an idea of how to prepare a trial balance. And also, at times, the questions can be tricky, and it is not in every case or cases that you will be able to find the trial balance off. There are times there may be disagreements between the debit side and the credit side of the trial balance due to some known errors or unknown errors. Because we know that we have in the trial balance that there are some errors that will affect the trial balance, and there are some that will not affect the trial balance, such as what's it called? Error of principal, error of commission, error of original entry, and so on. And others that will affect, such as a single entry of transactions, overstatements of accounts, etc., etc. Okay, so at times, out of innocent misrepresentation or out of negligence on the part of the accountant, the accounts may be wrongly classified, and also the accounts may be wrongly posted, and these have to be dealt with and corrected. But for this class, what we're going to be talking about is how to prepare the trial balance and also how to identify some of the errors and post to the suspense account. Okay, so probably in our subsequent videos, we're going to be making videos on how to correct errors. Okay, so right now let us jump into the videos because I have just 15 minutes to be able to do this, and I'm going to explain to you so that you don't get deceived when you eventually post and the account balance. Okay, now right now, so let us go into the video. So we have the following questions. The following are the ledger balances of United Company as of December 21st, 2008. Okay, so let me post that. Okay, so we have here, so let me try and shift this up a bit. Okay, so we have here the trial balance. Let me start from the left so that we can move on. So we have United Capital Company, or United Company, anyone there, company trial balance, that's at 31st December. Kindly bear with me with my drawing. 2008 as presented in the question. Okay, so let us move on. So let's draw this out. Okay, so let's draw this. Okay, so we have the debit side. This is the debit side. Okay, the debit side. This is the debit side, and we have the credit side. This is the credit side. Okay, so we have the first one. We have common stock. Common stock is similar to capital. Common stock. This is similar to capital. Okay, let me assume it's capital. Okay, so common stock, capital. So let's put the Naira sign here. Please don't forget to put the Naira sign. So we have how much? We have 60,000. 60,000. Okay. So we also have rent receivable. Yes, rent receivable. No, we say rent receivable. we're talking about the account of United Capital. Okay, this is the account, and it shows that they have rent receivable, meaning that they have debtors. They have debtors that have not paid them for rent. Maybe probably they have an outlet or probably a building that they leased out on rent. So those who are occupying the buildings have not paid them for the rent. So this is what we call rent receivable. That is, they have not received the rent, and this is an asset to the company. So we now debit that as rent receivable. That is 5,000 naira. Then we also have machinery. Machinery is an asset which is used for further production in the organization. Machinery. So every item of asset will be what will be debited. So machinery is how much? That's 45,000 naira. 45,000 naira. Okay. We also have accumulated depreciation. Accumulated depreciation is a charge against the assets. Accumulated depreciation is a charge against the asset because it's going to reduce the value of the asset. You can see there's accumulated depreciation on machinery, meaning that this figure is going to be depreciated by how much? By 8,000. So we're going to post to the credit side as a form of reduction. At the end of the day, this figure will now is now 37,000. So if you have your notes to the account, okay, notes to the account, you can have for machinery, notes 1, you can say machinery, amount, how much is that? That is 45,000 less accumulated depreciation. Accumulated depreciation is how much? Just 8,000. So you can also go through it this way, 37,000. Okay, so that is it. So if you're going to write 37,000 here, you write 37,000 here, then you have to clean off this. You have to take this off. Then you're going to have 37,000. But for this class, for this video to be able to further explain, so you can do it this way, or you can decide to do it this way. But always note that, put it in the notes, that this is what you've done, okay, at the end of the day. So let us move on. We have notes payable. Now, notes payable is, or maybe similar to what we call, bills payable. Notes payable. Notes payable. So notes payable is similar to a creditor. This is a liability. So how much is that? That is 12,000 naira. Okay. We also have notes receivable. Notes receivable also bills. Notes receivable can also be bills receivable. So that's debtors. So it's an asset. So we're going to post to the debit side 15,000 naira. Okay. We also have retained earnings. Retained earnings. Retained earnings. Okay, now when we talk about retained earnings, we're talking about that part of the profit that was not shared, with the shareholders, that was not shared with the shareholders for further distribution, but it was retained back into the business. Okay, it was retained back into the business for further production. Okay, so retained back into the business for further production. So this is going to be on the credit side because it is part of profit. Okay, so it's part of the profit of the organization that we are retaining for further production. Sorry, for further business dealings. Yes, you can also say for further production. So retained earnings, that is 7,500 naira. So we're going to put that here, 7,500. So let me point my pen down here, 7,500. Okay. We also have dividend. We have dividend. Okay. We have dividend. We have dividend of how much? So dividend is an income to the organization. Okay. Dividend. The company received dividend of how much? So coming. So let me put dividend there. Dividend, okay. Now, in respect to dividend, at times you can have dividend receivable and dividend payable. Okay. Now, when it comes to the issue of dividend receivable, this is an income to the organization, and there are times whereby the organization may issue out dividends to its shareholders. Okay. So, in the case of dividend, this dividend that we have here, it was not stated that it's a dividend receivable. So we have dividend of 2,000 naira. Dividend of 2,000 naira. Dividend of 2,000 naira, which is going to be on the debit side. Dividend 2,000. Okay, so we also have salary expenses. Salary expenses. Salary expenses, we have 3,500. Costs and expense 3,500 on the debit side. So let me move this up. So let me further draw this. Let me draw this. Okay. So we have what's that one again? We have depreciation expenses 4,000, interest expenses 3,000. So let me just quickly do that. Depreciation expenses before the time runs out. Depreciation expenses. That's an expense 3,000. Interest expenses. That is 4,000. Okay, that's 3,000. 3,000. Prepaid rent. So we have prepaid rent. Prepayments are assets. Prepaid rent, that is, we have paid for this rent, but we have not enjoyed the benefit. Okay, so prepaid rent is 2.5. We have interest revenue and cash 2.5. Prepaid rent 2.5. 2.5. 2.5. We also have interest revenue 6.5 and cash 2.4. Interest revenue. That's 6.5. We also have cash, which is an asset. Interest revenue is an interest revenue is an income. So let me do that. So it should be on the credit side, and on the credit side 6.5. Then we have cash, which is an asset. That's 24,000. Okay. Now at the end of the day, when we add up 5,000, this is 50,000, 65,000, 67,000, 70,500, 73,500, 76,500, 79,000, 13. Okay, let me add up again. 5,000, 50, 65, 67, 70, 73,500, 76,500, 79. Then 103,000. I think if I'm not missing anything. I'm not missing any information. The depreciation expenses is 4,000, not 3,000. Okay, depreciation expenses is 4,000. So this should be 4,000. 4,000. Okay. So 4,000. At the end of the day, we have 104,000 here. So we have 104,000. So let's close that. 104,000. Okay. So we have 104,000. So when we add up the credit side, we have 60,000, 60,000, 80,000, 7,500. Then we have 94,000. Okay. Now we have 94,000 here. Okay, which shows that this account did not balance. Okay. So this shows that the account is here to balance. So So to correct the error, we have to introduce a suspect account until we are able to determine where the error lies, even though we've assumed that the error could be as a result of the accountant calling payable as rent receivable. So, meaning that the account was wrongly classified. So, in this case, it's advisable for us to prepare the suspect account since we have introduced a suspect account into the trial balance. Okay. So, by doing this, we're going to prepare the suspense account. Okay. So, let's go ahead and do that now. Suspense. Okay. So, I'll click that. So, we have suspense account. So let's rule that suspense account. We have the debit side, and we have the credit side. Okay, so since this account is on the credit side, showing that it's affected the liability side. Okay, so we're going to post it down to the credit side. Okay, we now have balance brought forward as 10,000 naira. Okay, 10,000 naira. So we're going to leave this in the suspect account. So, though we have assumed that the rent receivable, that is the rent receivable, this is what the ledger account of a rent receivable looks like. Rent receivable, receivable account. Okay, so because this is asset. Okay, so we say balance brought forward. Okay, this is 5,000 naira in the ledger. Okay, and so for rent payables, I'm just drawing this ledger so that you can see rent payable. So rent payable account in the ledger account. So it will be credited because it's a credit item, is a liabilities that we have not paid. So we say balance brought forward. Okay, so that is 5,000. Okay, so in this case, we correct this correction by posting here saying rent payables transfer to rent payables. Okay, so let me shift that. Rent payables, so that's 5,000. So we have from rent receivables, we have 5,000. Okay, so we're transferring the rent receivable down to the rent payables, and that's the only way by which you can do that, by transferring the rent receivable back into the rent payables account. Okay, so on this note, we call it a day. And in summary, kindly note that the trial balance, like I said earlier, is a list or schedule of all debit or credit entries or balances transferred from the ledger account. Okay, and the trial balance is just a test of the arithmetical accuracy of the principal book of account, that is the ledger. And you should know the logic behind posting to the trial balance, that is, all assets you debit them and all liabilities you credit. All expenses you debit your expenses, then you credit your income, and your capital account you credit your capital account. Okay, so that is how you'll be able to find it easy to be able to post into your trial balance. And also you should know that all these entries that are posted to the trial balance are coming down from the ledger account. So kindly have an idea and ensure that you have an idea on how to post to the ledger account and transfer to trial balance. And also, most importantly, follow the double entry principle that says for every debit entry, there must be a corresponding credit entry. And for every receiver, there must be a corresponding giver. And also, in a case whereby your trial balance does not balance as we have in this question, you can decide to prepare or introduce what we call a suspense account. And because we say suspense account is a temporary account or a form of control account, okay? And this happens when the trial balance refuses to balance. That is either when the debit side is not equal to the credit side. And likewise, it's an account where you record unclassified transactions and discrepancies that you observe in the trial balance. So, thank you very much for your time, and don't forget to subscribe to my YouTube channel, share my video, and click on the notification bell so that you can have notification on any video I'm going to be dropping on this channel in the next class, or subsequently when I'll be making some videos for you to be able to learn how to prepare the various books of account. Thank you very much for your time, and God bless you. Have a great day. So when we add up the credit side, we have 6,000, 80,000, that's 60,000, plus 12,000, that's 80,000, plus 7,500, that is 7,500, and plus 6,500, that is 94,000, okay? So we're going to be having 94,000 here. Okay, so we're going to be having 94,000. Let me drag this up. So we're going to be having 94,000 right here. 94,000. So which shows that we have a balance of 10,000 naira still left. And you observe that this side is plus, is higher than this side, which is minus, okay? So then we have to introduce what we call the suspense account, okay? The suspense account. So it shows that there's an issue with the posting on the liabilities side. This is the liability, okay? So we post 10,000 to be able to correct this error until we are able to identify where the error is, okay? So let us check. So at the end of the day, by having 10,000, we're going to have, at the end of the day, we're going to have 104. Let me change that. So by introducing the suspense account, by introducing this, so we're going to have 100,000, 10,000 naira, which we balance up so that we can have 104,000 naira. So let us just go up and check. Now, I mentioned earlier the issue of the dividend, because dividend is a charge. Now, let me explain this. This dividend, we're posting to the debit side because it's a charge against the retained profit, okay? The retained profit of the organization, or the retained earnings, okay? So because we are giving out dividend out of the profit of the organization, because the charge of the total profit, okay? So it will reduce the profit of the business, while this 7,500 naira is still being retained, okay? So we're going to post this to the debit side as a charge, okay, against profit, okay, because we are distributing it out. So this is how we are going to prepare this account. But ironically, you may be deceived in trying to balance up this account by posting rent receivables. By posting rent receivables, which is 5,000 Abi, using as 5,000 rent receivables to this side. When you post rent receivables here, that's 5,000, is that also? This is wrong, okay? And also you now introduce, so that this is wrong. It will now give you 99,000, okay? At the end of the day, it will now give you 99,000. Let me add that together. So let's add that together. Now 60,000 plus 5,000, 65 plus 8,000, that's 73 plus 12, 85 plus 75, 82.5 plus 65, that's 99,000. So you're going to be having 99,000 in that case, 99,000. 99,000. Okay. But when we deduct minus 5,000 that we have posted to the credit side, when we take that off here, you're also going to be having 99,000. This is wrong. This is wrong. This is just a way of deceiving you and trying to force yourself to balance the account without understanding the concept of how to post into the trial balance. And that is the reason why I said that you need to understand the double entry principle and also familiarize yourself with the ledger account posting, okay? So when you do this, it is wrong. So let me just undo that. So posting that way, it is wrong. And so we can state, from what we have seen here, we can see that if we introduce the interest, the rent receivable to the credit side, then our account will balance, okay? Our account will balance, which means that this is where the error lies, okay? This is probably where the error lies. This is probably where the error lies. Okay, let me delete that away from there. So this is probably where the error lies. Yeah, this is where the error lies. And this can be as a result of misrepresentation or miscalculation, or we can say misclassification of the account. Okay, probably this maybe the accountant that prepared this account, when he saw this figure, ought to have called these rent payables. Should have been rent payables. Should have been rent payables, which then will allow us to post the 5,000 here. But erroneously, the company, the accountant, called this rent receivable, and that is why the account refused to balance. Okay, so if this was called rent payable, then it will come down here as 5,000. Then our account will balance, and also then we can now post and balance up our trial balance. Okay, so this is where the error lies. This is where the error lies, and this is an error that has to do with classification of the asset into the wrong class, which affects the principle of having to record the account in the right classification. Okay, so that should be rent payable and not receivable. So, but in this case, the error has been made, and subsequently in subsequent videos where we're going to be talking about correction of errors that will affect the trial balance and errors that will not affect the trial balance, we're going to talk more on this. Okay, so right now this is how we're going to do it. So since we have the suspect account, it shows that this is where the error is. Okay, you can see that I said that earlier, this is where the error is. So on the liability side, so that means that we have understated the liabilities by 10,000 naira, which we have to find a way to correct. Okay, so on that note, we can call it today. But let me just, since we have posted to the suspect account here,